Yep, we're off.
Hello everyone and welcome to this evening's webinar, or at least it's evening here in the UK. And in fact, we have the most spectacular full moon outside. It's truly, truly extraordinary. I don't think it's one of those harvest moons, but it's enormous. And funnily enough, they say that a lot of traders actually pick their stocks around the new moon. So whether there's any correlation between a new moon and stocks going higher, I don't know. I'll have to go and check that out. But judging by the price action that we've seen on the indices so far, it's been a very lively day. But before we start, may I just draw your attention to the disclaimer that you can see on your screen. As you know, trading can be a very risky business, so please, please don't ever think of using money that you cannot afford to lose. Those of you who have been with us for these sessions over the last few weeks will know that we've covered all sorts of things from the price cycle. We've looked at different markets, but this session on a Monday is where we've really focused on stocks and commodities. And as always, there is my husband sitting next to me, David, who will be joining us as soon as I have finished speaking. He's waving at you. I do promise you, I do let him have a word in edgeways. But today, we've kind of changed things a little bit again. We're still going to focus on commodities and stocks. And for those of you who've never been to one of these sessions before, or maybe, I know we record these sessions and they go up on YouTube and not watched before. The way we've changed it slightly is to the extent that, what am I trying to say? We are going to focus on VPA, and we are going to also incorporate our quantum trading indicators. But the VPA concepts that we look at are actually taken from this book here, A Complete Guide to Volume Price Analysis, which I know a lot of our attendees have actually read, and thank you so much for your wonderful emails and comments about the book. And as you can see here, there are actually over 275 five-star reviews about the book, and it's a book that I know has changed the lives of so many traders. And I don't just mean independent retail traders. I actually mean professional traders and hedge fund managers who shall remain nameless, but I do have correspondence from them to tell me that, they have used it at a professional level. By professional, I mean they don't know any more than you do. It's just they handle other people's money. And I think that's really the difference between, if you like, what we do when we handle our money and we try and, make a return on it, and someone who is a pro trader. And my definition of a pro trader is actually somebody who has to handle other people's money as well as their own. So that is what we base what we do in this room. It's based on the principles and concepts that are in this book. And the book also has a follow-up book, as you can see here, where there are over 200 worked examples of the methodologies, the volume price analysis methodology. And in fact, the book has also been translated into Chinese, both traditional Chinese, David?
Yeah, and complex.
And what's the other one called?
Complex.
One is the Taiwanese and one is mainland China, and also in Japan as well. And they've also taken the examples book, and I'm really, really proud of that. And it's lovely to get the emails in both Chinese and Japanese from traders. And I have to put it through Google Translate. It does come out a bit weird sometimes when you're trying to explain accumulation and distribution. But anyway, that is what we cover in this webinar and in this series of webinars. We focus on stocks and commodities, we apply volume price analysis, we use the NinjaTrader platform, and we also take the indicators from there are our own indicators that we develop, our quantum indicators, and it's from what we call the essentials package. And I just want to cover this at the beginning because I know some people sort of have to leave a bit early because they've got other commitments, and I also go over this at the end again because I know people join us at different time. There are nine tools and indicators. The whole package comes to $749. You can pay outright, or we actually offer an easy payment, 3 monthly, based on over 3 months. What we've also done since we were together is we've actually put together what we call a VPA, volume price analysis trading. It's not a trading room. I must be careful about what I say. It's really a kind of chat room stroke forum. And I'll just show you what it looks like. This is the back end. This is what it is. This is the chat middle in the middle here. And you can see this is, we literally just went live earlier on today. Actually, it's only been going for less than a day, as it were, and this is where we've combined what we had a group called Trader Chatter, and we just opened it up to anyone who is really interested in volume price analysis and actually uses volume price analysis in their trading. And I found this platform, which I think is absolutely super. As you can see here, there's this in the middle. You have all sorts of widgets. It's got a calendar, a stock screener. You can set this up yourself. You can interact with your fellow traders. We cover all the markets. We've got a lot of forex traders here, but David and I will be looking at stocks. We'll be looking at commodities. And if you are interested in joining, then all you need to do is send me an email at anna@annacooling.com. So I just want to stop there because I know there's been all sorts of things happening on the market. So I'll just put that down. But if you've got any questions, just drop them into the chat box. Now, today, what do we do when a day like today for trading? As an intraday trader, it's brilliant because there's been huge moves in the indices, and if you were to read the headlines that you get on some of the sites that perhaps you follow for news, you would think the world had the sky had fallen in today because everything was a sea of red, and it probably was at some point. And it's often very difficult, as certainly on an intraday basis, is to know what is happening, especially when you read these very, very dramatic headlines. And we always say that this is when you have to look at related markets, because this, all trading is really about money flow and risk, and where is the money going to? What is the market mood? Is it risk on or risk off? And there are a number of related markets that you can look at to give you some kind of idea and a background, a context of what is happening in the markets. And of course we have the VIX. David looked at the VIX last week, and we'll take a look at the VIX as well. But really, there is another instrument that you may want to keep on your dashboard, or certainly have access, access to. And investing.com will do it for you, and it's free if you can't get it on your trading platform. And that is the 10-year bond yield. And the key number, the key level is 3%, because essentially, when yields start to rise and bonds fall, that is not good for stocks, basically. And this is the one that you should have, and really just keep an eye on it. As you can see here, this is on the day. It did fall. It has sort of recovered slightly, but this is the number. This is the number you have to watch, which is 3%. And how far either side of that number is it going to go? And it pretty much tracks, is the one instrument that you need to, not just the one, but one of the instruments you need to consider when you are trying to gauge what market sentiment is. And the 10-year bond yield is the one to look at. I'm just going to pass over to David to see if he wants to say anything about the bond yield. Do you want to swap screens, by the way?
Can do if you, yeah.
No problem. I think we might as well swap screens. I'm actually going to be, David's going to have a look at the indices, because as I said, the price action's been extraordinary. I've never seen a candle on the NQ is extraordinary, as is the one on the YM. But I'm actually going to go and also look at one of my favorite stocks, which is GE, because there's interesting things from a fundamental point of view that is happening to that stock. And it's as you know, it's pretty much beaten down, and maybe it's time, just to see whether it's actually hit a bottom at last.
Yeah. Hello everyone. We're just switching screens, so don't worry. I've just got my volume turned down on my headset for some reason. Let me just adjust this a little bit. Let's make sure that's there we go. That's better. I can hear myself now on the headset. Apologies. I'm just going to show my screen, so you should be getting the Ninja Trader screen up any second now. There we go. Brilliant. Let's just move the chat out of the way. There's a lot to talk about and a lot to look at, and there's some really fantastic lessons in here. Very quickly, if I just walk you through the arrangement of the charts, we're actually on the YM, but I've also got the NQ and the ES, and the YM is the futures derivative for the Dow Jones cash market, and I've got the ES, which is the equivalent on the S&P 500, and the NQ, which is the equivalent to the NQ. Nasdaq 100. If I just pop let's just have a start with the 5-minute chart for the YM. And this has been the price action. In fact, before we do that, let me just go, as Anna said, let's just go to, let's change this one. This is a YM as well. This is 15-minute. Just change this over to the daily, just to get it into context. I'll just bring that up as big as I can. There we go. This is the daily price action. The low of the session is down here somewhere. So we've got this tremendous wick to the bottom of the candle. We're currently flip-flopping around. We're slightly off the open here, but you know, we could recover that and actually end up in the positive territory at the end of the session. The reason I just wanted to start on the daily candle was that I referenced it last week, and at the time, I said the expectation, when we've had this extreme price action that we had here, where we had the Dow falling 1,000 points, we then had this followed up with this candle with massive volatility. The volatility was triggered on both candles, which is what you would expect. These two little purple arrows indicate the volatility indicator has been triggered. In other words, we've moved outside the average true range for this particular instrument in this particular time horizon. The volume under here is colossal. And this was a monumental struggle during the session with both heavy buying and heavy selling. At that point, you couldn't draw any firm conclusions other than the expectation that we were likely to see further volatility and a further trading range where we were trading in and around this region, which is basically what we've seen. What's also interesting about it is that if you note this candle here, we had this very, very strong up candle. But actually, when you look at the volume below it, and remember, you've always got to compare like with like. So when we're looking at the candle here, you know, we're also tracking back to try and find an equivalent candle. Now, on this particular chart, there isn't one of that size. But nevertheless, when you look at this particular price action on the day, and the associated volume there, and you track back over here and you look at the volume associated with this price action, which is, I guess, 1.5 times, the volume looks a little bit lightweight, to say the least. For such a strong move, you would expect to see, I'm not suggesting you would expect to see volume in the area of this particular candle, but you'd expect to see something pretty dramatic in terms of volume, because after all, this has been a cataclysmic fall. And we've now seen a pretty strong rally to the upside. But when you actually look at the volume on it from a daily perspective, does it fill you with confidence? Not particularly from a longer term perspective, certainly not from trading the following day. Would I expect that the following day to have followed through from that? The answer is no, because the volume is a little bit out of balance. It just doesn't look right. It doesn't look serious enough, given first of all, the volatility that preceded it and the cataclysmic events that preceded it, and secondly, the actual price range on the day, because for that market to move that much, given how much selling pressure was going on in the previous few days, it just doesn't look quite right. And indeed, what we've seen thereafter is we've seen the price action move back again into this range. We're trading around this yellow line, the volume point of control. The volume here is now building the whole time. So we are in a range where we are likely to be range bound for the time being, with further congestion for lots and lots of different reasons. We've got this massive amount of support and resistance building over here. Certainly the platform under here has pretty much held for the time being, just above the 25,000 level here. We've got slightly less resistance above in this region, and again some minor resistance here, but certainly in terms of the volume profile, it's massive at the moment. This is where all the volume is being created within the volume point of control that's sitting at 25,430 odd, which is where we're oscillating for the time being. The trend monitor has transitioned to red, so it's a question of just being patient. Now today is a cataclysmic day, again for a different reason. We've got this massive wick to the underside, and what we're now waiting for is for the close of the session, and obviously the close of that volume bar, to see whether it reinforces the perspective of very strong buying. If that volume bar is not a size that I would expect to see for such a strong reversal, then it's going to have a relatively weak response. But if the hammer has developed with a massive amount of volume, a ton of buying has come in to support this market, which is what you expect to see. After all, we've gone from here right the way back up here. That's taken a huge amount of effort to move that 400 or 500 points in a relatively short space of time, because at the start of the session the market was falling quite strongly, and it's reversed very strongly to practically recapture all the losses on the day. Then the volume associated with that daily candle has got to be significant. If it is significant, then what we expect to see is possibly the precursor to a much more developed reversal than this was, which was simply a reaction and really not associated with sufficient volume to drive that market and almost develop a V-shaped rally. The price action we're seeing right now is very typical. We've had, and the analogy I often use is of an earthquake. You have an earthquake, there's a period of pause, there's a period of calm, and then maybe you get 2 or 3 aftershocks which follow thereafter. That is very typical when you see these very dramatic moves in the market. You very typically see the aftershock waves follow, and gradually over time the market pauses and then reverses and develops into the trend back higher, which is what we're expecting. And certainly given today's price action, what you expect to see is, if that is very strong buying, we should expect to see the market rally thereafter off, not literally off one candle, but certainly over the next few days, if there is strong volume associated with it. We just go back over to, actually this is a pretty good, and let's start with the 5 minute. There we go. Just some really, really nice, simple lessons here. And just to highlight where we are in the trading day, the nice thing with Ninja is that you can pick off exactly where we are. This is where the US market opened. This is 14:30 UK time. So this is 5 hours ahead. This is the US Open. So we know exactly where we are, and we're currently just coming towards the end of the US session over here, and hence the reason we're seeing this market congest quite strongly now into a phase of consolidation at that level up there. But just several highlights here that I just want to point out, which may not be instantly obvious. First of all, the massive surge in volume. Now, this surge in volume when the market's open is almost always associated with volatility. It is the precursor. It is this massive surge in volume. We've had pretty low volume through the Globex. Remember, these markets are trading 24/7 now. The cash market's open. We get this massive surge in volume. And one of the reasons we moved the webinar from this period of price action is because this is typically what you see: volatility on volatility on volatility. But what I wanted to highlight here, because these are some nice examples, are really just 2-bar reversals. If you've never focused on 2-bar reversals, I'm not saying they will always work, but they are precursors. They are often signals, and the reason they're powerful is very simple. Firstly, because they represent the phase of bullish and bearish engulfing. In other words, a bullish candle engulfing a bearish candle, or a bearish candle engulfing a bullish candle. But secondly, and perhaps more importantly, is that when you overlay the two candles together, then what they create are two of the strongest signals, which are upthrusts or shooting star candles, and equally at the bottom, hammer candles. So where you get the price action, the downside, price recovers. What have we got? Overlay one on the other. You've got a hammer candle. So if you put this on a 10-minute time frame, that's what you would see. And it's another reason for using multiple time frames, because what you see in one time frame will give you a lot of information about the time frame that you are trading yourself. So it's very powerful when you're using multiple time frames, not only to give you information from an indicator perspective, but also to give you information from the candle arrangement perspective and the volume. It's very easy to overlay one candle on another with a two candle approach, much more difficult when you've got 3, 4, or 5. If you were looking at this on a 30-minute time frame, it would give you a completely different picture, give you further information, help you in trading analysis. But I just wanted to highlight it here because you've got several nice examples. You've got another one here, little 2-bar reversal. You've got a little support platform in place. All these things play a part. They just help to build the picture that you're trying to understand in your mind and analyze from all the pieces of the jigsaw as to what is like to happen next. Now, in terms of trading this today, I wouldn't say it's easy, because one of the hardest things to do is when a market is in free fall, as it was in the early session, it's very, very difficult to take a position in the opposite direction, because your instinct is that all the news will be terrible, you'll read the headlines and all the rest of it. So it's very, very hard to take a position in the opposite direction. And as Anna said, part of your analysis comes from viewing what is going on in other markets. For example, what is going on, just drop that out of the way for a minute, what is going on in terms of the yen? What was the yen doing? The yen, after all, I'll just pop this up, make it a bit easier. Pull that over. Again, this is where we are. This is 1430, so this was the market open in this sort of region here. Then we start to get into an hour and a half, 2 hours into the session, and then we start to see the yen selling off. And it's just so important to understand the relational aspects of market behavior. As Anna said, bonds and bond yields, currency markets. A lot of traders really pay no attention to what is going on in terms of currencies. They pay no attention to the dollar. They pay very little attention to the yen. They pay very little attention to risk markets in general. But that's what it's all about. It is about money flow. Money is looking for risk or reward. It's looking for risk or return. Higher risk, higher return, lower risk, lower return. And really that's all this business is about. And it's understanding those relationships and knowing where to look to help you in making those trading decisions. I'll just pop this chart up because this has got another really nice lesson to demonstrate about congestion. One of the most important aspects of price behavior is congestion phases, because congestion phases dominate the chart. The trend phases are relatively short. The congestion phases are much longer. We have congestion phases for lots of different reasons. There's congestion ahead of news. There's congestion where we get to selling climaxes or buying climaxes. There's all sorts of reasons why markets move into congestion. And one of the biggest problems is understanding when we're moving into a congestion and when we're actually moving away from a congestion phase. And we actually use this very simple little indicator, and we cover this a lot in the education program. But basically using this little indicator, and what it helps to do, and this is just a nice example, we're coming up here in the trend, so we have a pivot formed here, so we're fine with that. We start to move out. We've got, what have we got? We've got some volume coming in here, and actually when you look at the volume on this candle here, just in isolation, just changing tack for a moment, when you look at this candle, you start to think, actually, do you know what? There's a lot of volume going into that candle, but it hasn't actually gone very far. Okay, it's not a strong signal that the market is going to reverse, but we go to the next candle and we've got a strong up candle, but the volume's kind of dropped away a little bit on that. So this sort of candle with this sort of volume, it's a signal that potentially we're seeing maybe some weakness coming into the market at that point. Allied to that, of course, you're also very aware of the fact we're coming towards the end of the session, so it's no great surprise to see the market to move into a congestion phase. But we're moving higher. We have the pivot low here and we have the pivot high. Now at this point, what are we expecting? Well, we could see the market carry on higher, just reverse a little bit and carry on up. But what we actually see is we see another pivot delivered here. Now, once you start to see these pivots delivered in more or less the same region, it starts to give you an indication that we're moving into a congestion phase, which is further confirmed when we get this level here with another pivot to the downside, then we get another pivot to the outside, and so on and so forth. And all of this is just building a congestion phase in real time. It's kind of telling you that the market is moving into a congestion phase at that point. And it's just another way of understanding when a congestion phase is building and when we're actually moving into a trend. And we had another example of it here. We came out of this volatility candle. Lots of volume under this particular candle. This is just, classical weakness. It's a classical anomaly. And this is exactly the same as that. It's what I said before. This is a 2-bar reversal. It's exactly the same as this, but it just looks different. But if you overlay one on the other, it's exactly the same thing. The volume under here is pretty high. So if we see that, what is that telling us? Are we anticipating some weakness? Of course we are. It doesn't mean the market is just going to reverse over and roll down the hill very quickly. But what it does mean is that at this point, the market is finding some weakness. The big operators, the insiders, the market makers, whichever market you're applying this to, there's volume driven in here, but the market is not receptive to higher prices, and the sellers have come in and driven the price lower, and that's why you've got high volume with this weak candle. So it's no surprise when you see the market reverse. And what volume price analysis is really about is actually the anticipation of what is likely to happen next. And based on that anticipation, the management of your emotions in a response to what you see on the screen. And that really encapsulates what volume price analysis is about. It's the biggest problem we all have as traders is emotion, is managing our emotion through the peaks and troughs of what is going on an intraday basis. And the biggest problem of all is when we've got a nice position in the market and the market starts to reverse against us. That's when your emotions become most powerful, because you're starting to lose a profit that you thought you'd already had and you'd already mentally banked it anyway. And in applying VPA in those situations, that is when it's at its most powerful, because it will help you to manage your emotions, because it will give you a pretty good idea of what to expect. And if you expect something to happen, then your emotions are not at such a high level. Let's just drop that down out of the way again, see what's going on. Over on the right-hand side here, I've got the Renko and the tick chart over here as well. And the Renko and the tick are just variants of a time-based chart, and work in exactly the same way. The nice thing with the Renko is, I haven't talked much about the indicators to be honest, but the nice thing about the Renko is that what Renko does is it really smooths out the price action. So again, it's using the charts, the techniques to manage emotion. And if you use a Renko chart with a time-based chart, what you will find is that it helps to keep the emotion under control, because for the simple fact you're dealing with a brick, there's no wick to worry about. You're not looking at a busy chart. You're looking at something which is metronomic in many ways, and it just helps to keep the emotion under control. I've got the trend dots on here, and I've got the trend monitor on here, which works in exactly the same way as on the time-based charts. And you can see in the pullback, the trend dots change color first. So we go into gray, we go into the red bricks start to form. The trend monitor hasn't transitioned, it transitioned into the dark blue, but then we go back into the bright blue again as we transition out of this, and we no gray dots on this occasion, we're back straight into blue again. Little red brick there, just flattened off a little bit, carried on higher. Now we're up into some gray dots here, and we're starting to roll over into a little bit of red. And you can see over here on the trend monitor, we're just starting to see a slight transition there on the trend monitor itself. And one of the nice things with several of the indicators, I was going to say all the indicators, but several of the indicators at any rate, you can adjust them for sensitivity. So for the trend monitor, for example, if you want to smooth out those congestion phases, you can adjust the sensitivity. It's a little bit like the volume control on a radio. Just drop that down out of the way. Just what I was saying earlier on about, let's just go to over to currencies for a moment. There we go. In terms of related markets and what is going on, this is the Aussie yen, which is a very good barometer of risk appetite, because it's driven around the Aussie, which is a commodity-based currency, and the counter currency is the yen, which is very much a risk currency. So it's a kind of proxy for risk. It doesn't work 100%. It doesn't work in lockstep. But again, it gives you a sense of what is going on in terms of sentiment in the market. And of course, on the currency strength indicator, just flick that over. This is, where are we? This is the, forgive me, I've got slightly different colors here, but this is the yen, which has been falling. And it's just starting to, which are we? Where are we? That's the CAD. That's the yen. Apologies. There we go. Got them pretty much the same color. But the yen has been pretty much, it was up here around about 3 o'clock, 3:30, and it's been starting to fall as sentiment changed in the market. And that, of course, has been reflected pretty much across the yen complex. Got the Aussie yen, Euro yen, etc. Just head back onto the US workspace again. There we go. Pretty quiet right now. This is, we're in a congestion phase. We've got the volume point of control up here on the 3-minute time horizon, and we've got a transition through here. Would you be looking to trade this right now? Probably not, because we're coming to the end of the session. The volume point of control is sitting up here. You see we've just got the heaviest concentration of volume here on the chart. We had some low volume here, which we moved through pretty quickly. And this is the other aspect to do with anticipating what is like to happen. When you have the volume point of control on the chart, what this is giving you is it's giving you the concentrations of volume up and down the chart. So it's telling you where there's heavy volume and where there's lighter volume. And whereas support and resistance traditionally works from a price-based perspective, what the VPOC does is works from a volume, price, time perspective. So it introduces the concept of time. In other words, how long a price has been sat here will denote the depth of volume. And where you've got light volume on the chart, then from a volume perspective, you would anticipate the market to move through relatively quickly. Why? Because from a volume perspective, there's very little interest at that level. There aren't huge volumes of traders trapped at these levels, because you've got to remember that in all these levels, there will be traders who've been trapped into weak positions who are hoping that the market will recover and reverse to where they are stranded, at which point they will exit, which is one of the reasons why the market will move to these regions where you've got heavy volume and will generally pause, because that is what you expect it to do, because you've got a vast volume of traders sitting there, all sorts of different positions, and you expect the market to pause there. Where you've got light concentrations of volume down in these regions, for example, or this region here, for example, if this market broke to the downside right now, then as it approaches this region, you would expect it to move through here relatively quickly, because there's very little in the way of volume to actually cause it any degree of pause. And indeed, the same could be true of price as well. You've got all these little lines up and down here on the accumulation distribution, which is just denoting regions of price resistance or regions of price support. These are very light. The lines are very thin. When you get down to this region, it's a little bit heavier, and heavier still down here from a price perspective. So again, it's using the two in combination. It's using traditional price support from a price perspective, and allying it with something which is based around volume, price, and time. Just pop that down. I'm just going to pass back to Anna for a moment.
Sorry, could you just answer any questions about as you're doing time frames?
Yeah.
And then I'll say something about time frames as well.
Sorry, when I'm rabbiting on, I tend to have the chat box closed, so forgive me if I don't answer your question straight away. Once I'm in the flow, I tend to keep going, a bit like a steamroller. Melanie, on a day like today, do you need to grab the faster time frame before it settles, as opposed to waiting for longer time frames? Actually, it's a good question. The answer is that what it goes back to is, even if you're a slower time frame trader, the faster time frames will give you help in judging what is going on, because and I've used this analogy many times before, it's the pebble in the pond, but it's so true, because when the pebble lands in the pond, the ripples from that splash point move away. And when something happens on a 1 minute chart or a 5 minute chart, if it's strong enough, then it will ripple through to the 10 minute or the 15 minute or the 30 minute. Now, if you happen to be a 30-minute trader, or indeed you're on the hourly chart, for example, I'm not saying in that case you would go down to the 1 minute, but you'd certainly have a view on possibly the 15-minute and the 30-minute to give you a heads up as to what was going on. You might well see buying coming in on those timeframes. You'd see it first on 15. If it's strong enough, you'd see it on 30. And if it's stronger still, you'd see it reflected on your hourly chart. So whatever you're trading, it's always, you've got to have a perspective of your time frame. Now, clearly, if you're on a daily, weekly, you're not going to be interested in what's going on a 5 minute. It's all about what's relative. But certainly in that sort of time frame, if you're an intraday trader and you're trading maybe a slower time horizon, maybe a 30-minute or perhaps even an hourly chart from an intraday perspective, then you've got to look at keeping in proportion and seeing what is coming up at you from the faster time frame, because they will tell you what is going on at that price point. Now, at that time frame rather. Now, if obviously if it doesn't follow through, then you're not going to see it on your slower time frame anyway, and what you're going to be looking at is probably just a minor reversal on the faster time frames, as opposed to a major reversal in trend. In other words, from a primary, what we've had today, which is a primary bearish to a primary bullish, you might well see that as a primary bearish into a minor secondary trend reversal, pullback, whatever it may be, and then re-establishment of the primary trend again. And it's only when you see the reversal from primary to primary, that is what is going to ripple through across the time horizons. So I hope that answers the question. Probably a little bit of a long answer, but that's what you have to look at. I don't know whether would you like to add something to that? Okay, let me just pass back to Anna. Okay, well, leave it on the Ninja screen for. I may flick around charts while Anna's talking, but don't let me put you off. Yep.
It's a great question, because in fact there's something else we were going to do, because I had an email from someone who again has gone into the world of trading and discovered the VPA book, and is really grateful that price action and volume has kind of made things a little bit easier for him. And it's really coming down to this question of timeframes, because one of the questions is, well, if I want to trade intraday, what do I do? And he sent me some. I got some charts that he very kindly provided. It's a particular stock that he's interested in, and maybe we'll look at it next week, because I couldn't quite read what the ticker was on the picture, and but it looked very interesting. But what was far more interesting is the time frames he was looking at, and given that he was looking to as I said, to trade it intraday, he's got the hourly chart. He's looking at the daily, and he's looking at, again, the daily over a 4-year period, a 6-month period, and on the hourly over a 3-month period. Now, clearly, if you're wanting to be trading intraday, those are far too long. He also looking at this stock from a fundamental perspective. So that tells me that he's probably looking at it from more an investment perspective, because as a trader, as an intraday trader, you really have to define your time frames. And to be honest, I've said this so many times. I said it in the VPA room that basically there's no hard and fast rule. What time frames mean? What do I use as an intraday trader? And the way to, and I didn't mention this, but I'm going to mention it now, is how long do you think you can stay in a trade before it becomes uncomfortable, right? At what point do you feel, I can't bear this anymore, I can't either, it doesn't matter whether it's going up or down, it's your and that's down to your temperament, and also the amount of, if you like, fear that you are feeling. And if you are very, very fearful, but you still want to do this, it's like, you know, throwing yourself into a swimming pool and you're not very confident swimmer, but you're saying, you know, I'm going to throw myself in anyway, and, you know, maybe not hope for the best, but it forces you out of your comfort zone. That's what I'm trying to say. So if you start from the premise that when you put a trade on, and for whatever reason, your temperament, you know, your emotions, you're not quite at that point where you can handle, you can manage the emotions that are created, that are triggered by being in a trade, because it's your money that you put at risk, then that is what it's going to determine. Then in that case you see, well, maybe I should stay to perhaps the faster time frames, because I know I'm not going to be in there very long. It doesn't matter that maybe the daily is looking very bullish and it's probably going to go up, but down on the 5 minute, the 5, the 10 and the 15, there's a very nice short setting up, maybe 10, 15, 20 pips or 20 points. Take them, because, you know, you're only going to be in there for maybe a matter of an hour, 2 hours, who knows. So it's really, really important that you establish that. And as a sort of kind of rule of thumb, if you're on the faster time frames, you're on your entry, what is the chart that you are going to use to actually trigger the trade? So let's say you're going to use the 5 minute, the 2, the 3, the 5 minute chart, right? Well, how far in the slower time frames are you going to benchmark that chart? I would say no more than the hour. That's it. As far as you're concerned, down on the 5, 10, maybe 15, how far are you looking further up? You stick to the hour. If you want to use the hourly chart as your entry chart, so you're looking at the hourly chart, how much further do you have to look out? Well, I wouldn't say even the daily. I would say maybe the 8-hour chart, David, session. Yeah, something like that. If you want to use the 4-hourly chart perhaps as your entry point, well, what do you benchmark that? You're probably looking at the daily chart. So these are not, you know, there's nothing is set in stone. You can Google it and you can say, you know, best time frames to trade, and there's daily effects will come up. There's a guy there who says, you know, this is what, if you're a micro trader, if you're a short-term trader, if you're a swing trader, time frames. But ultimately it really comes down to your temperament, and partly also the time you have available, but I think it's primarily temperament. David, do you agree with that?
I do.
Do you agree with that? Right, I'll pass back to you, and then I've got GE. I've just got something on GE. Is that okay, Lauren?
Yeah. Thanks, darling. Just while Anna was talking there, I was just keeping an eye on various bits and pieces, but what is also interesting is, and this is not always the case, but certainly for, I just flicked it over there while Anna was talking, you probably saw, and as I say, this is not always the case. Normally you would expect the NQ and the ES and also the YM to move in lockstep pretty much, and generally speaking they have been, but in the last, certainly for a lot of this year, you might find a situation where the NQ has closed up positive and maybe the Dow's gone negative, or vice versa indeed. But as far as today is concerned, they're all pretty much showing exactly the same pattern. That's on the NQ and that is on the ES. So we've got pretty much exactly the same price pattern across the three sisters. And what we're waiting for is, I haven't got this on automatic close, I've just got this on price action, so this will close off once the end of session comes along, and it'll close off the volume, and we'll just see what volume we've got on the day, and it'll be interesting to see. But keep an eye on it and see what happens. Give you a heads up on what's going on tomorrow. Just a very quick little VPA lesson here. 9 o'clock. This doesn't always happen like this, but I just happened to notice it. We had this big lump of volume come in, bang on 9 o'clock. This is the close our time. And there's some decent buying came in at the end on that particular candle. So what are we expecting on the next candle? Well, we don't expect it to fall. We expect it to maybe go sideways, or a little bit of positivity coming back into the market, which is what we're seeing. And remember that these sorts of moves here are quite significant. You're talking, once you start talking 10, 20 index points, then that's $100 even on a single contract. So, it's not insignificant money, and made pretty quickly and lost pretty quickly if you're on the wrong side. But that's just a really neat little lesson here. Nothing else at the moment. That's just seriously looking at just one candle, one volume bar. What is it telling you? Well, there has to be some buying coming in here, because we've got this lots of lovely volume coming in. It has to be buying, because otherwise this candle would have closed down here somewhere. It hasn't. It's closed right back up again. So we're expecting a little bit of buying come in. And of course, we're seeing that reflected on the Renko as well. I'm going to pass back to Anna at that point, and we'll switch screens as well. Sorry, I haven't gone on to stocks either. Okay. Can you see my screen? I can.
I've actually found, I was trying to get the chart of the 10-year yield on my Ninja, but for some reason the instrument won't load, so I'm going to have to talk to Kinetic about it. But I then came across it over here at Yahoo Finance. But the reason, not just to show you the chart, as I said, you can find it on investing.com, and you can see here, this goes back right down to 62, and it gives you an idea of where we are in a much longer perspective of time. But what I really wanted to show you was the news feed underneath this, because this is extraordinary. This is actually relates back to Melanie's question, which was a great question, actually. Right, this is 23 minutes ago. It says stocks mostly recover from an early plunge on Wall Street. Right, then we've got the lottery here. Then we had an hour ago, investors are fleeing bond futures. But look at this 4 hours ago. Wall Street shares resumed tumbled more than 2%. Now, 2% is a big move. 2% is what we use also when we're looking for significant moves in stock. It's just a kind of rule that the rule set that David and I have developed over the years. As disappointing forecasts for industrial bellwethers, blah blah. Saudi Arabia, Italy's finances, trade war fears. All three are trading below and the 200 moving average. Oh my goodness, right, that's it. Put the black cap on, and that's it. It's Armageddon, as it were, a key technical indicator. It's a great way to put into perspective how just what is happening at the moment, and how brave do you have to be? You see that this is 4 hours ago, it's not 4 days ago, 2%, all these key metrics that people use to try and, to decide that this is it, this is the time to go short. And the 200, we talk about the 200 MA, and below that we have 10 hours later. 4 hours later, and the price action that we've seen on the chart and that David has gone through, the sun is shining once again. So this is how, it's just a factor of trading life at the moment. But David and I truly believe that if you understand price action and you understand its relationship with volume, then you can take this kind of news in your stride. You can say, oh yeah, that looks interesting. Yeah, but what am I actually seeing on my chart here? Oh, I'm seeing a ton of volume coming in here underneath that bar. Yeah, let me just hold on. Let's see if it's, oh yeah, fine. I'll take a long. Or if it's the other way around. That's the kind of if you like, state that you want to try and be in to be able to trade these markets. Anything else you want to say?
You just want to flick back over here for a minute, because it's
no
very
problem.
Funny. Just going to switch back onto Ninja for a moment, because it is it's a neat little lesson. Did you like my I did. Has it come up? Can you see the screen? Yeah. And that's what we were looking at. That was the volume, that was the price action, and what's happened. We've had this really, really neat little rally. And bear in mind, this is from, where are we, 25,000, let's say 170, and we're currently trading at 232, so that's over 50 points in that move higher. And I can absolutely guarantee you there will be people going short in here, totally unaware of what was going on under here, and that's why the market's rallied. It's only 3 candles, but 50 points, whatever it may be, that's $250 in there, made in 9 or 10 minutes. That's what trading's about, and that's what volume price analysis is about. I'll pass back to you, darling.
Hold on, I'm just going to see if I can't find my chart anymore.
Anna's lost her chart. Hold on a minute. What are we looking for? GE?
Yeah, I've got it. Right. Could you, do you mind pulling it up, darling? Is that okay?
No, what GE?
Yeah, I'm just going to say something about GE.
Okay, I'll put it on over here. These are some favourites of mine. That's Ford. That's a gold mining stock we looked at last week, moving within the volatility. Let's just change that. Let's just change Ford to GE, and I'll pull it up full size. There we go. There's the GE chart.
Okay.
Yep.
Oh, I need the weekly and you should go to the monthly first.
You want the monthly? Okay, let's go the monthly. The weekly. There we go. That's the weekly. Delightful. You want the monthly?
And the monthly, yeah.
Okay, and the monthly. There we go. Poor old G. When we were writing cover calls on G, it was trading around $36, $38, which is up here somewhere. It's now moving down to single figures. I'll just pass back to Anna.
The reason I asked David to just pull up GE is because obviously it had a bit of a bounce. If you remember, when we spoke about it a few weeks ago, they actually fired their CEO, didn't they?
They did.
There's a new guy. There's a new guy come in, and there's a lot of news around GE at the moment as to whether it's actually reached a bottom, and is it a buy? And a lot of analysts are actually saying, it's reached a buy. It's down to $12, whatever it is, $12 at the moment. And looking at the monthly chart and looking at certainly the weekly chart, it's kind of trying to go into a kind of saucer, isn't it? So we'll see, but it's got some way to go basically on it. And also to tell you that according to Finviz, there's 63 million shares traded today on this one. 63 million shares. But what's also interesting about the weekly chart is the VPOC, is the volume point of control, which is what, $15? $14. So at the moment it's still very, very bearish. There's a lot of quite good news about GE at the moment. They're supposed to have got some sort of contract in Iraq. I don't know whether that's firmed up yet. They're coming out with some new jet, some new planes, a sort of a cut down version of what Concorde used to be. So it's kind of making all the right noises. And as I said, it's such a premier, used to be such a premier stock, and also it's one of these stocks that's done the complete opposite of what the markets have done for the whole year. The markets have gone one way, and poor old GE have gone another. But from a technical point of view, as I said, that can all be going on in background, and if it's one that's on your watch list at the moment, as I said, the levels are very, very clear, and I think we just may have to wait a little bit longer. Do you think so, David?
Absolutely.
Is there anything you want to say on that one?
No, there's the only thing I would add to that is that this was the week that they fired the CEO, chief exec, and got a new one in, and we had the gapped up open, a lot of volume coming in under there. But we also had the volatility triggered as well, so it was no surprise to see the market retrace, or the stock rather retrace into that price region. And to be honest, there's nothing particularly in that chart, or even on the monthly, that would suggest that we've got any serious buying of that particular stock right now. And what is likely to happen after such a mega fall is that you'll see that stock. I mean, there will be a lot of people buying it, because it's GE, and B, because they're always looking for cheap blue chip stocks. That's just the nature of investing.
And they also, I think they still pay the dividend. They're still paying a dividend.
They're still paying a dividend, and it's all, when you're as an investor, or indeed as a stock investor or a stock buyer or a stock holder, you're always conscious at the back of your mind that a stock has been to $100 and is now trading at $10, therefore it must be cheap, and I also expect it to trade back at $100 at some point. Well, it might well do, but that might well be in another lifetime. There's a reason that stocks are cheap, there's a reason that stocks are expensive. But what volume does is it reveals the truth behind the numbers. It reveals the truth behind the price action, and it will tell you when the buyers are moving strongly into the market, and they're not at the moment as far as GE is concerned.
There's quite two nice comments about GE on a couple of guys. Jose said something. And Sam
Oh, okay. I'll pass back to you.
No.
Yeah. It also kicked out the doubt. Yeah, it's it's all bad news for GE at the moment. But as I say, it's when you're involved in stocks, it is a different mindset, often because the stock market per se is viewed as one that always goes up. And so the bias of sentiment is you're always looking for stocks that are going to move higher, and you're generally not looking for stocks to short. That's partly because a lot of stock traders and investors don't like shorting stocks anyway, and it's a little bit more of a complicated process through the brokerage, because the broker has to borrow the stock from another customer and pass it to you, and there's all the issues with dividends and what have you, we won't go into now. So the stock market per se has a bias to the upside always, so stock traders are always looking from a positive perspective and not so much from a negative perspective. Just to highlight, just can't remember what got down here. Yeah, I've just got a few stocks down here. I was just having a quick look at gold. Gold's been trying to rally. We had this big move up on gold very quickly on the daily. We had the volatility triggered that day, ton of volume coming in. We've been moving sideways ever since, and we've got the pretty strong region of price resistance overhead. So, it's struggling a little bit at the moment. What we're also seeing, more interestingly, we're seeing the volume fall away, that participation, that injection which came as a rush for safe haven, is now dissipating, and the buying is falling away. So it doesn't look terribly strong for gold, but at least it's propelled it away from the VPOC and also away from the drop through to 1180 and on downwards. I'm going to pass back to Anna because we've run a little bit over time. Yep. Yep. Yep, I can.
Fantastic. And just to finish off on GE, I know Jose said, "Oh, is it coming to the end of an accumulation phase?" Accumulation takes a long time, and it may have a few false starts, as it were. I do agree with David. I think we've got a lot more consolidation. We may even see some more downside probes. As I said, the level that the stock has to clear before it's got a nice solid platform is in the 14 region, $14 per region. Yeah. So it's there on the chart, and if GE is one of the ones that you're looking for, whatever, maybe for options, or maybe just look to invest, or look to day trade, I just think it's at quite an interesting point on the chart, given this huge fall that it has had. Right. Okay. I can't quite believe we've gone over our allotted time, but I know we've had some people join us in halfway through, as it were. So can I just sort of reiterate very, very quickly what we do in this room, as you've have been hearing, is we look at volume price analysis, how we apply that to the chart in both real time, and we look at some historical examples. In this particular session, we particularly like to focus on the indices, stocks, and commodities, although I have to say we haven't had too many commodities this time around, but we'll certainly do pick it up next week. And what we do also is we use our NinjaTrader indicators, particularly from what we call the essentials package, and that is 9 tools and indicators. And as you can see here on your chart, they are the whole set comes to $749. And you can pay outright, or you can pay on 3 easy monthly payments. But the indicators are available to purchase individually, or you don't have to buy the whole package. You can buy one, you can buy 2, you can buy the volatility. In fact, we often suggest that people just start with the volatility indicator. In fact, we're going to do something on volatility next time, aren't we, David?
Yep.
And really, if that one little indicator has probably kept, more traders safe, if you like, than anything else that they have used before. But if you want more information, you can find details at quantumtrading.com. That's where all the ninja tools, the videos and the support pages. What I also mentioned earlier on, and perhaps you didn't catch it, is that we've started what we call, it's not really, it's a chat room, it's a forum, it's a place where if VPA, you want to know more about it, or you will use VPA in your trading, doesn't matter the market, whether it's Forex, whether it's commodities or stocks, you're more than welcome to come along and join us. That's where David and I are as well. It helps us to answer questions and just, put things up that we think may be interest to you. It is by invitation only, so you have to send me an email and then I can send you a link. And this is what it actually looks like. I'll just give you there it is there. This is the actual main feed itself. You see, we've only literally been going a day, just over a day, and it's just a fantastic platform. I've been looking for one of these platforms for such a long time that also allows, it feels more like a trading environment. So as I said, we've got widgets here. I've got a calendar up. We've got some stock information, but you can, there's a whole number of widgets that you can call up and you can customize it to yourself. It also has charts. You've got instant access to it. It actually uses Trading View. We're porting some of our indicators over to Trading View. So you instantly pull up a chart. You have it alongside your your normal trading screen. So as I said, you're more than welcome to come along with that if you've got questions. There's some really, really good people here and who we know are really very, very successful, as I said, with volume price analysis. Some have the quantum tools, have the package, and some only have one or two. And it's always nice to, to meet fellow traders, as it were, in this kind of environment. So that's what I have to say there, where we are invitation only. And if you want more information, you can either drop me a line, anna@annacooling.com, or helpdesk@quantumtrading.com, or even david@quantumtrading.com. Is there anything else you want to say?
No, that's it.
That's it. Brilliant. Thank you so much for coming along. We're back tomorrow morning. I know some of you join us then. If not, we're actually back next Monday night. We had to change because it's half term this week and we had other commitments, but we should be back next Monday night. So if we don't catch up with you tomorrow, have a great trading week, and we'll catch you next time. Take care. Thank you.
Have you switched off?